Is this a stock market which has gotten ahead of itself and is now overvalued?
It's certainly getting there. So one of the things that we look at is where the leadership is coming, what's pushing the markets higher. And one of the things we've noticed is that the valuations and what's really pushing the markets in the recent month has been coming from growth stocks. And when you look at the premium that you're paying for a growth earning versus a dollar from a value stock, there's a premium of about 60%, which is an all-time high. So you really see investors not only putting money into equities, but they're putting them into the riskier assets like growth. And look, when yields are this low, it's totally normal. We're used to this. Valuations start running up because what are you going to do when yields are below 2%? Yes, you're going to put your money into equities, but not only that, it's not just a full across the board, full breadth. We really see them going into some of the riskier assets even within the equity class. And that's what's concerning, is that investors have really shunned all the value stocks.
You know, and I wonder, Erin, is there any way to sort of discern whether or not that money going into the riskier stocks, is that a short-term bet on technology doing well, which is waiting to get out, or are these true longer-term investments that are being made?
You know, right now, it's not just about technology. Also, you know, there's a lot in communication services and consumer discretionary. But certainly, yeah, we're concerned about whether this money is going to come out. But this has been a trend that we've been seeing over the past 3 months. And a bigger concern is that even as stock markets are rising and investors are paying more and more for these growth stocks, we're actually seeing earning expectations really come down. And it's not just earnings are coming down for Q2 because we're adjusting for Q2 as we head into the second quarter. Earnings expectations are coming down for the next 4 quarters across the board. So we're really seeing a lowered outlook when it comes to profits, but investors are still piling into these stocks. And so that's definitely a concern.
That is the biggest and most sort of vexing aspect of this, is that as concern about growth is elevated, as expectations of growth have come down, the money continues to pour in. What is the risk that, quote, the market, meaning stocks, not bonds, is going to be massively wrong here?
We're certainly getting to more extreme values. We've never seen a premium of a growth to value anywhere near this level. The 5-year average, there's normally a 30% premium, and we're at 60%. Okay, so like double the premium. So what this really says is this isn't about fundamentals. This isn't because growth stocks are earning so much more money. This is all about confidence. And so it won't take that much for that confidence to erode in order for those stocks to come back down to more reasonable valuations. Because we just don't see it on the fundamental side. And also, obviously, if bond yields increase, equities become less attractive. But it's definitely on shakier standing, and it wouldn't take much for this kind of frothiness to erode.